Good evening, all. This is Shay Horowitz, ShogunTrading.com. This is a free weekly newsletter. This is Sunday night. Hope you had a great weekend. Hope you enjoyed this political season. It's just absolutely insane. No, I'm not really enjoying it. The market is scared. The market is really afraid of what's going to happen. Remember that the market always trades 6 months, 9 months, or a year ahead. It evaluates what business is going to do, and people invest or come out accordingly. So, you know, the market is the chart is a reflection of people's expectation based on fear of what could happen, and greed based on what they wish would happen, or what they expect on the profit side. So that's the reason why the market is going down. If it comes back up, that's because of expectations, because they were thinking it's overdone, and they think they're going to be able to see some value later on. So that's what the market is doing. Now, I'm not going to get into politics because it's not my place. This is S&P 500. S&P 500 has been in quite a sizable downtrend for quite a while. I was really excited to see this higher bottom over here, because higher bottoms usually mean a change of trend. But we also saw one top and then a lower top. The second lower top means consolidation, not a change of trend. Therefore, we're looking at a wedge-shaped consolidation that is building right now. You can see it's building quite nicely. You can expect the market to keep going tight until it breaks. Now, the conventional wisdom, or percentage-wise, we're a lot more likely to continue a trend than to reverse a trend after a breakout. I really thought we were gonna get, you know, some kind of a crazy value-based rally back, but that didn't happen. Instead, we're consolidating. Friday was actually a pretty substantial day for the market. That's for sure. So, what's going to happen right now? I think we're going to continue the downtrend. Let me show you a daily chart. On a daily chart, you can see a very distinct downtrend. Yellow line is a 21-day moving average. The blue line is the 50-day moving average. And the red line is the 200-day moving average. You can see that they are staggered, and that's something that definitely signals a strong downtrend. We are consolidating, and I think if we break around the 900 level, I think we're going to go for another wave down. This wave down could be substantial because it could be one of those people just letting go. Where's the next support level? Well, the next support level is really the 838, which is the low that we reached on the last move. But if we break that, here's a weekly chart. Still can't find support. There's a monthly chart, and there's your support. Your support is at 765. 765 from the levels that we reached this week, which is 839. Actually, it was a week before that, 839. So from 839 to 765 is what is possible right now if we break down. There are no other support levels until we reach the 765. 765 was basically the low we reached after 9/11. If we continue down. I'm not trying to scare you. Don't want to scare you. But what I want to show you is what could happen if we continue this downtrend. Downtrend again on the daily. Here's your consolidation, and what could happen. Yes, the opposite side could happen as well. We could see the market coming back up. We could see it doing this, but that would be very, very labor intensive and could take quite a while for it to come back. If you do see a break of the 1,000, which is a very large psychological level, whole numbers are usually very, very psychological, because CNBC can say we broke 1,000. Versus we broke 900 versus we broke 947.25. We could see a reversal and come back up. I do suggest looking at the ETFs, the spiders, diamonds, the Qs. Those are great. You can look at the Pro shares, at the Ultra shares. You can look at the SDS, SSO. Those are all good. Last week I talked to you, and we talked about a rally. This was Friday, and this was Monday. And I told you that if you see a bounce, to go into the ETFs. And I hope you listen. I hope you bought the spiders, the diamond, or the Qs on the way back up. That could have been very, very good for you. Monday was a very, very profitable day on a very, very large rally. I'm not going to predict politics. I'm not going to talk about politics. But you listen to the TV, you know what the market is facing, what kind of economic conditions the market is going to face, what kind of economic conditions business is going to face if one or the other gets elected. You know the plan. It's our job to know the plans, to know the details behind them, and that's why the market is trading the way it is. Let me see one more thing. Yes. We took advantage of the downtrend. We had a lot of fun with the downtrend. Shorted across the board. We carried 8 positions on the short side. We then closed most of them, and then we switched long side ETFs, if anybody took the ETFs, and then we messed around a little bit over here for very, very short term, very, very small trades. Some of them are positive, some of them are negative. Not a whole lot to show for them. Now what I'm waiting for is the consolidation, and as soon as I see a break of 900, we're going to go short on a heavy side. If we break the 1,000 level, we're going to go long on the heavy side. But in between, not a whole lot to do. Whenever the market consolidates, whenever we go into a wedge ship consolidation, you can expect the moves to get tighter and tighter and tighter and tighter and tighter. Probably going to climax closer to the elections, and then you're going to see a breakout. It is much better to be a trader right now than to be an investor for obvious reasons. Investors right now really suffering, and I'm sorry that people are suffering. I don't like to see people suffering, but I do believe in taking control of your finances. I do believe in being proactive, and if you see the market diving, it's your job to move to cash or to go short on the market, and that's what we do. That's the reason why we do what we do, is because we're taking advantage of the market, whatever the market tells us. We are investors, we are traders, and investors sometimes take negative positions because they expect a certain move. You can expect a certain move to the upside. You can also expect a certain move to the downside. And traders take both sides. They're not just trying to buy, catch a falling knife as they're falling. Stay away from bargain hunting. Stay away from the single-digit stocks. Try not to go for the Fannie Mae, Freddie Mac, Washington Mutual, or any of those crazy ideas that people are coming up with right now trying to find bargains. Try to stay with strong stocks if you're going to go for the long side. Try to stay with weak stocks if you're going to go for the short side. That's about it. Enjoy the political season. Have a great week. We're here to help. We're here to help you trade. Sign up for our newsletter and you'll get the picks on a nightly basis so you can take advantage of every day the market on a daily basis. Have a great week. Take care.